How to make the most of your money. When people think of financial planning, they often jump to the subject of how to earn more money. However, if you're already earning enough to cover your bills and you want to start saving, the best thing you can do with your money is learn how to spend it wisely. You could work hard every day and still end up in debt, or even worse, having nothing left over because you spent it all on junk. Don't let this happen. Read on to learn about the smartest ways to spend your money so that you never have to worry about finances again. The cost of living. First things first, make sure you're meeting your monthly obligations, minimum payments on loans, credit cards, etc. Many people have to take on a side job just so they can meet these basic expenses. Now, it's time for you to learn how you should prioritize your money according to your personal situation. For example, if you are just getting started in life and don't own any property yet, then paying off debt would be the most beneficial use of your hard-earned money. On the other hand, if you are retired or close to retirement age with little debt left, then investing might be a better option. Determining what type of person you are is important because different strategies work for different types of people. Smaller expenses have bigger impact. Although small, certain expenses can have a large impact on your finances. To maximize your money, avoid accumulating small bills and going over your budget. Try to anticipate as many payments as possible, and when you are saving for something big, make sure that you set up a long-term saving plan so that you have time to earn enough money. Always compare the interest rates from different lenders and take into account their other terms before taking out a loan. When planning for retirement, always consider your age and lifestyle goals before investing in any type of retirement fund. Consider using an automated system such as Mint or Personal Capital to stay organized with your spending habits. Credit card traps. It is important that you read the credit card agreement carefully before applying for a credit card. There are many traps and problems for consumers when it comes to credit cards. One major problem with credit cards is that there can be fees associated with closing accounts. Some banks charge an inactivity fee or annual fee if the account has not been used within the past 12 months. Also, some banks charge $35 or more if your balance on your credit card goes over its limit by as little as $5 to $10. If you have a large balance on your account and are not able to pay it off at once, then this could be costly for you. There are also fines or late payment charges associated with credit cards which vary from bank to bank. Save for nice-to-have items. Whether you want to save for a vacation, home, or a new car, there are plenty of things you can save up for. One thing that is great about saving up is that the money grows over time. When you make a deposit, your money will start accumulating interest from day one and will compound as your deposit grows in size. At its simplest form, think about it this way. If you invested $1,000 at 10% interest over 5 years, it would grow into $1,800, quite an impressive amount. Saving for the future has been shown to be one of the most effective ways to ensure financial security later on. Focus on growth assets, investments and interest. First, it is important to distinguish between a growth asset and an income asset. A growth asset is an investment that typically earns more over time, while income assets produce regular streams of income. Examples of investments include stocks, bonds, real estate and savings accounts. Income-producing assets include retirement plans like 401ks or pensions, and interest-bearing accounts like certificates of deposit, CDs. Insurance can be underrated. In order to establish and protect your financial future, you need insurance. For instance, one type of insurance you may want is life insurance, so that your family will be provided for in the event that something were to happen. Just like how a savings account will help ensure your family is financially stable in case something happens, life insurance also ensures they are taken care of if something were to happen and we weren't around. Invest in yourself first. A lot of people never invest in themselves first. But it's important. Whether you're working on a skill or creating something new, Putting the time and money into yourself is one of the best investments you can make. Investing in yourself first will also free up space in your budget for other things that matter more, like spending time with family or adding meaning to your life. And let's not forget about paying off debt and building an emergency fund. Put savings on autopilot. One of the simplest and most powerful ways you can save more money is by setting up a regular automated savings plan. This will ensure that your saving happens every single month without your having to think about it. You can set up monthly automatic transfers from your checking account into your savings account. Just like with retirement contributions, automatically transferring a set amount on a regular basis will help grow your emergency fund or save for big goals like buying a home or college tuition much faster than any traditional savings account would. For example, if you put $100 in an online savings account each month and earn 3% interest, you'd have over $5,000 saved in just 5 years. Setting up an auto transfer plan is simple with many banks. If you follow these tips, you'll get more out of your money.